Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. First market we'll take a look at will be the Australian US dollar. Aussie US dollar broke down hard. We didn't see it last week. Out of town for graduation. Good to be back. We were talking about this level just a little bit above 77 there. Didn't hold. Prices shot right through it, and you saw what happened and pretty much dropped down to the bottom of this current range. I think we need to take a look at the Aussie longer term. Here's a monthly chart. You can see all that data going back 15 years or so. And when you look at that chart on a monthly basis, really the long view, it looks like it'd be quite possible to go down and tag that long-term trend line. So we could see this market closer to 70 than the current levels it's trading at right now. A lot of people still view the Australian currency as a commodity currency, and that makes sense from that perspective that you're still in a bear market, even though you're seeing value down there, you're seeing support, but you're still in a bear. You're in a bear in so many of these commodities. And I see the Australian dollar, I see Australia almost as more of a trading platform, a great consumer center, but the rest of the market sees it as a commodity currency. And we're big believers here that you'll have to let the data organize itself. And right now, longer term, it looks like still lower prices in the Aussie. Shorter intermediate term, you have support just below. So this guy may be shifting from two-way trade to bearish trade. Again, we'll have to see, particularly when we see improved U.S. data going forward. We've been saying all along you were going to see the U.S. economy put out some big numbers this spring, and you're seeing those numbers now. The May employment numbers in the U.S. were big. We think retail sales, which comes out this Thursday, June 11th, we think that'll be a big number. The U.S. economy really started kicking in late April and May, and you're going to see that in the data going forward. So it's going to be interesting with that good U.S. data to see if support can hold here in the Aussie. It could be a quick trip down to support in the low 70s, and we'll definitely take a good hard look at Aussie down there. Next market, dollar Swiss on the daily chart, really the epitome of two-way trade here, of a sideways market. You can see it found support down there, and then you just fell shy of resistance right around the 96 handle. I guess we'd have to lean on continued good U.S. data to support this guy. On the other hand, the technicals, the data itself is saying now you're still pretty much mired in two-way trade here. You can see you had a bullish reaction to that U.S. employment number, but then later in the day prices slumped down, and look at that, you're almost right in the middle of where this guy's been all year. So looking at continued two-way trade here in the dollar Swiss, we like buying dips. We like accumulating it long term too. Next market, the dollar index. We've been pulled up on this guy the whole way. We see no reason to change right now, but again, back to our theme from 2 weeks ago, you're still in two-way trade here. Pretty good reaction higher in the dollar index. You'd expect that. Yeah, you had better get a good reaction higher off that last employment number, and you did, but you're still in two-way trade. Looking at the currencies, I really don't see anything standing out as far as me wanting to get up to trade London hours or stay up late and trade Tokyo. That, on the other hand, could change quickly if you get a close above 98 even in the dollar index. I think that opens up the door to the upside here. Next market, the euro, and more of the same. Overall sideways, but longer term there's still a lot of pressure on this market. I think it's going to go much lower, and it's just a matter of time of letting this correction, which started in early spring, run its course. Again, it's kind of ironic. It's kind of funny that we're expecting good data in the spring in the U.S. You saw it in late April. You really saw it kicking in May, real time, but you're not seeing that data coming out till now. Here's another one where it's kind of hard to get excited in the euro until it takes out 108 even on the downside. It takes out 108 even on the downside. You have to just go after it on the short side. I'm looking forward to that. Gold market next. Now here's a market I can get excited about and want to focus on trading this guy, because it took out a key level. It sliced through a key level here. You had a little bit of a consolidation the last week or so, but now it looks like it's resuming its downside trip here. Looking at gold longer term, here's a monthly chart. There you go. We think you're going to see that 1100 level pretty quickly, and when it takes that out, that's really going to open up the door to the downside. So we've been bared up on this guy all along, and it's proven us right now. You're seeing acceleration on the downside. We like trading gold on the short side with leverage. Last market we're going to take a look at U.S. interest rates, and this is the one thing, and this is the one market that I had confidence in that we were going to see directional price action higher, and I definitely believe that you're going to see higher interest rates in the United States. This chart's bearing it out. You're already seeing it. So the 10-year yield has jumped from less than 1.9 in the early spring, and now it's 2.4. That's a big move in U.S. interest rates. So interest rates heading higher in the United States, that's going to support a bull market in the dollar. It's also going to support a continued bear market in commodities. So longer term fits right in with our theme. The one thing we think you can count on right now would be higher interest rates, and long term a strong dollar, shorter term continued weakness in the commodities. My name is Jay Norris. I teach trading at Trading University. Thank you so much, and we'll see you back here next week.